Good evening, everyone. Let's look at these new indicators I recently released. Thank you for coming here and spending some time with me today. Let me hide some of them so we can see them one by one and see what I'm doing and how I'm doing it. Trading live futures. First indicator below is let's see the name, the golden interval meter. Soon to be released. It's actually it's the this one here is actually included with the golden net drift current indicator, but it's going to be taken off the charts and moved down to be an oscillator. So it's going to be the golden net drift scanner. And let's see what other indicators I have on. We have the golden net drift indicator. This is the micro version. And this is the macro version. It is the same indicator, but we changed the settings to get these two views together. So what do these indicators show us? Let's look at them one by one. This is the golden net drift on a micro basis. So we have bullish gamma up above, and we have resistance in blue here, and we have support at the yellow. So when the yellow line is angling up, it means that bulls are currently in control. And when the blue line is angling down, it means that bulls are not in control at the moment. And if bullish gamma is angling up, it is acting as a magnet. So price is being magnetized to 25,208. We're trading NQ. So price should now be moving towards 25,208. And why is that? Because bears are not strong and have taken their profit at 25, 199 or 200. So what's happening here? Bears are starting to wake up because we're almost reaching bullish gamma. We just have looks like a gap up candle. So we're opening above where we have bullish volume. This is where bulls are waiting to buy calls towards this bullish gamma target. We can also scale up or scale sideways to get different views. This is a dynamic indicator. So depending on your range, you're going to get different results, as you can see here. But it's going to give you a strong basis to know where the bulls are buying and what the gamma is if you stretch it out to a higher time frame. And if you look behind us, there's clues. We have a put floor right here. This is all based on the 1 minute. Put floor at 25,101. This is where bears would take profit and will create buying pressure. So this is the bearish range between 25,101 all the way up to 25,131. So we have about 131 points of bearish area. So above the zero line is where we have bullishness. We're in a bullish environment currently, bullish imbalance. And we're also above the yellow line. This is the call wall. And the call wall is a range between 25,172.50 to 25,195. And look where we're bouncing right now. If you stretch this line out, looks like it has support at this level. And it looks like bullish gamma has been attracted to this area right here, where you can see that it was consolidating at. So just by stretching out the indicator to a multiple time frame, you can see a lot more information. So right now, bears are um, causing resistance because this put line is angling up and calls are angling down. So bulls are getting weaker at this level near this gamma range because it looks like gamma is already hit right now. So right now, bears are calling price action to come downward to 25 197.50, but there are bulls hanging out at 25 200. So we have to see. It's this we have a wedge pattern going on currently, so we can break out to the upside or downside. Currently, gamma is bullish on the micro time frame, and the trend has been bullish, but that can easily change. So let's see what happens. It looks like gamble was hit, so price action should be going downwards, at least to this 25 200 level. Now, if we add golden net drift with our micro settings, we can get more data. This is the put wall. I guess there's a reason why price has been getting rejected at this level. In addition to it being bullish gamma, it's also a put wall. So it's been price has been rejecting off this line. So even though we have bullish gamma, we have a giant put wall above. So every time we hit this put wall, price action should actually go in the opposite direction where bearish gamma is. So we have bearish gamma here, and this is the macro gamma, and we have the micro gamma over here. So price should be ping-ponging between 25,202 down to 25,101, 169. But we have bulls hanging out here, macro bulls at 25,190. This is a good level to potentially buy calls at once we cross back above. Or we can be patient and wait for this 25,169 level to hit. I'm not taking any trades yet. We're just watching the charts. So if you zoom in, you can see that gamma is already hit, the bearish gamma on a micro level. But if we're looking at a higher range, it wasn't hit just yet. But I did say, and we did look at this, and there were buyers at this level. So right now, is the best time to buy calls is when we open above the put wall. We have buyers down here, macro buyers, and we have a put wall. It looks like we open above this call wall. So let's see. Gamma's calling back up. We're still not above this put wall. We have to open and close above this put wall of 25,199 to go long. We have to open and close above 25,199, 50. Let's see. Otherwise, bears are still in charge. This is the put wall. This is the call wall. And we have buyers. Currently, looks like buyers are in charge, but it might be a bull trap. We don't have any buy signals because I haven't turned on the golden confluence indicator. The golden confluence indicator is going to show us where resistance is. It's going to give us more detail. And if we have buyers, if we have bullish confluence, right now, this is a bullish candle, but we have resistance above. But this is a very early entry for calls. And we have resistance above on two areas. Though we do have a buy signal, but this is just one candle. This is a tiny buy signal. This is your earliest potential and best entry to get a call. But there's no confirmation until you have a larger circle. That means the current and the 3x time frame are in agreement. So right now we're opening at resistance above a macro call floor in this case because it's underneath, and we're opening above where buyers are at on the micro basis right now. So we have two areas of bullishness working for us, and we have an opening above, right up above here, but resistance is nearby. So the best thing to do is typically wait for the larger the this is the small and this is the normal size and there's a large size. Typically when you see the large size, that means a big move is about to happen or the move is about to come to an end. You should be taking profits soon. It's basically the breakout. The breakouts don't always happen unless it's a true breakout. And a true breakout will happen when there's no resistance. And once you start seeing bullish fair value gaps, which takes us to our next indicator. Let's turn that on. So if we have bullish fair value gaps, that means there's bullish momentum going on. And an example of a fair value gap, let's see if we can find one on this chart. Right now, I might have to show you all my settings. The way I currently have it to use to trade futures or scalp during the day is I go to my inputs and I show bullish fair value gaps. I show bearish fair value gaps. I extend the box until filled. I show Bosch, BOS, and CHOCH. It's a break of structure and change of character lines. Um, I don't enable multi-time frames. You can, I'll give you more information if you want. But for this purpose, I don't enable it because I already have a lot of multi-time frame information on my chart. I don't want to busy my chart too much. I currently have limit regular fair value gap age to 5. I don't want more than 5 on my chart. And I limit my multi-time fair value gap age to 5 as well. I alert on fair value gap creation and I alert on fair value gap fill. This is the current settings. The styles I keep by default, it's the boxes and lines are on. So I hit OK. So right now it's just choppy. We can trade the chop, but it's not the best trade setup. Well, we have resistance right here. We need a breakout, but this zero line right here can also be resistance. So it's really good to pay attention because right now gamma is bearish. It's right down here at the bottom, and there's a seller sitting up here. Bullish gamma is just we're currently at the our target if we enter calls down here somewhere. So gamma is just the range is very tight. So it should be choppy. So risk to reward, we can scalp, definitely scalp for sure, but it's not the best step. Are we going to break to the upside or the downside? Currently, it says it's a bullish um multi-time frame agreement right now. So either the one X time frame, 9X time frame are in agreement, or the 1X and 3X time frame are currently in agreement. You need two time frames in agreement to have bullish momentum. Now, if you have this in agreement, in addition to fair value gaps, like currently, like right now, let's see if we can enter calls. I just enter calls just based on this fair value gap. I know there's resistance above, but look at that. For the purpose of just instruction, we're already up 40. Let's see. Let's go up. Oh, wow. Look at that. We can exit now, take profit, or we can wait a little bit. Let's see what happens. We have a bullish fair value gap. Typically, we have more bullish fair value gaps after this. This is bullish momentum, this bullish fair value gap right here. Oh, another bullish fair value gap. So our target would be resistance up here. Or if we want to get even tighter, we can zoom in a little bit. Right now, bears are not strong. We have support. We have bulls down here, and we're at bullish gamma, but this is resistance. But we have these bullish fair value gaps. We're above the support level right now. It should continue up. Let's see. Oh, we're crossing above resistance right now. Then zoom in a little bit more. We have two bullish fair value gaps. One's gone. Still have the other. We opened above this. We should probably we opened above this. We opened below this. We should probably exit our trade soon. You have to stay above this level. Exit soon. Well, let's see what happens. I don't like that we opened below though. Let's give it a chance. Okay. See, it was a little bit of a potential liquidity hunt. The price should come back down here. All right, we have a bull flag situation going on. So price may move in a flag pattern before it goes up, or it may continue to go up. This is when the 3x or 9x time frame are currently in agreement, but the 1 minute may not necessarily be, or the current time frame, which is the 1 minute right now chart. We're on NQ 1 minute futures. The current 1 minute is not necessarily in agreement with the two higher time frames that we use, which is the 3x and 9x time frames are in agreement. So we just need the 1 minute to hop on board. So this candle currently made a higher high. So that's a bullish thing. It's crossing above this high, and hopefully it can cross up above this high right here. We're at 75. Let's continue to ride this up. Let's see how far we can go. We still have one bullish fair value gap. We have a bull flag. We're bull flagging right now. Now we open up above this resistance level, which is bullish. All right. It's looking good. See if we can ride this up higher. This purple line is slightly angling, well, it looks horizontal. So it's not acting as resistance or as a magnet right now. It will allow price to touch it right now. But it should act as resistance once price touches it. We're at 105. 40. We have support here, but we have some resistance in between. So let's see if the support can hold. Price opened up here. This to me is a potential liquidity hunt. Typically when price opens up above support, it'll try to retract up to it, even during these situations. That's why I'm never really worried, because right now price should want to return back up to 25 to 11. And we're also still above the call wall, and the call floor in this case, and where buyers are at. So right now, it looks like we have a bearish fair value gap. We have a bullish gamma here. See if we can bounce before it retreats. Let's see. Either way, we have buyers below, so it's not the end of the world. I still think there's room to run, because We should be hitting this before we continue up. We've already hit the put floor, bullish gamma. Remember, price should want to return above this area where the candle opened to test it to see if it truly is resistance because it opened up near the top of the candle. No sell signals yet, even though we have bearish gamma, but I think we should be looking for a bounce between this area here. Bears are now making price drawn downward towards this area where buyers are to test to see if buyers really can hold this level. We have two levels of buyers. You have a little bit of a resistance level above. We have bullish gamma above. Bullish gamma is currently angling down, indicating it's not really acting as a magnet, but this is bearish gamma and it's angled horizontal, so it means it's neutral. Just like the purple line up here, the resistance line is where sellers are at. They're neutral right now, but they will act as resistance and this should typically when the bearish magnet gets touched, price is repelled unless it's angling down. If this red magnet is angling down, this is a bearish gamma. If this is angling down, that means price is being magnetized towards it. If it's angling up, it's repelling price. Same thing with bullish gamma. If it's angling down, it's currently bearish. It's repelling the price. If it's angling up, it'll act as a bullish magnet. It's attracting the price. So this was already satisfied, this bearish gamma wall. I'm not sure if it needs to be retested, but we shall find out. So buyers are holding up. We have bearish confluence and a bearish um, uh, fair value gap above. Only down 95. It's not the end of the world. You can put your stops here at 25, 197.50 if you want to be super safe. But bearish gamma is right above it. So you might want to maybe give yourself a little room. But it looks like this might be an opportunity for us to potentially exit this trade because it might be going down if looks like gamma is acting as a repellent instead of attracting price upwards. But bearish fair value gaps, um, all fair value gaps eventually tend to get filled. But price actions typically wants to be bullish. But are we in a bearish environment right now? Um, Potentially, is this a head and shoulders situation? Let's see. But it looks like we're still in a bullish environment because we are above calls right here, which is still above this put wall. So bulls are still slightly stronger. You have some buyers coming in, but I think price is going to come down and then bounce up. That's what I predict. Let's see. If you're in profit, we might want to exit because it might be volatile, but we had a bearish confluence and now we have bullish confluence. So this is kind of quite a battle we're witnessing. So, but bulls should be in control because um, we're above this call wall. But remember, we have this bearish confluence and a bullish confluence. So price should go down and then continue to go up. We had a gap as well right here from where this candle opened. This is a bullish candle. So price should want to continue to go up. At least I'm hoping, at least with this indicator, typically signals when it's bullish confluence, it'll happen within the one or two or three candles, or it'll eventually happen. But like right now, we have see these circles are the extreme large circles I was telling you about. They typically um are the end of a move or the strong of the start of a really strong move. but we're above the call wall. So let's see right here. But this put wall is trying to act as a magnet currently. But we're above this call wall. We're near bullish gamma, and we have so if it's a bullish gamma situation, we should assume it's still bullishness. Bulls should be in charge. It's not bearish, the micro gamma. If it was red right now, we should be worried. But let's see. It looks like we might be able to fill this fair value gap. That's why you shouldn't freak out. But if you're trading a NQ, it's a little more dangerous than trading MNQ. So it's like probably trading 10 times that contract, I believe. So let's see. So you can make profits and pass your evaluation quickly. We could have taken profits here, but it should be a bullish environment all the way up to this put wall right here. We should just be able to ride this out. Let's see what indicators we have. We also have golden trend line. Golden trend line helps us visualize where resistance is and where support will be. I also like to throw on the Bollinger Bands. I have the 200 SMA on for my Bollinger Bands. And I also have my another Bollinger Band, the regular 20 SMA, but I built it into this indicator that hasn't been released yet, but it'll plot the regular Bollinger Band. So this buy signal might be our opportunity to exit our trade or ride it up because I think it should be a bullish environment because we have bullish gamma. It should continue to push price up because we already satisfied this bearish gamma. We can at least ride calls up to, we should be able to ride calls up to, or long this all the way to 25 to 13. That's where resistance is at. Let's see if we get a bullish, more bullish gamma. Right now, the last signal was bullish. So I'm going to assume it's going to continue to be bullish, especially if we can close above this bearish gamma right here. Let's see. Looks like we opened right near the bottom. So, oh no, we opened above it. So let's see if we can continue up. Looks like we opened above the bullish gamma wall. Above this, there's no resistance besides this bearish trend line we have here. So the golden confluence indicator will draw the all the basically all the algorithms. This is a bearish channel right here, but it's actually a bull flag will break out because the top of the line is a green line. So once price breaks out, we should have a bullish breakout. We also broke out of this bullish um, parallel channel. So this golden trend line can change. So it's saying our resistance is up here. So price should hit right there at 25,213. That'll be our profit target. That's basically where we probably should have exited prior over here. So let's take profit this time. Even though we can go all the way up, we can probably get rejected here and have to try again. So let's take profit and not miss out our chances again. Remember, bullish fair value gaps, they're very forgiving and they'll give you a second chance if you miss out on the first opportunity typically. Let's take profit soon. Should hit that. I love how the indicators work together. We're above this put wall right here, the zero line put wall right here. Another bullish fair value gap. This might hit 25 to 20 if we want to really ride it out, at least towards where this apex is, where this resistance and um, bullish trend line should act as support unless it opens below it or something like that. But this is a bearish pattern. We should take profit probably here just to be safe. If you really wanna, or you can raise your profit stops. I have mine down here. This way it'll do it automatically for us. I'm gonna put it right where the fair value gap is, right below it. So this way we don't get we get stopped down profit. I have a limit by a limit sell above, but I don't want to. Let me actually. I should probably break it down. Let's see. It's very high up. Still up above. Sorry, guys. Where is it? What happened here? Where's my order? Did I cancel it? Oh, I got stopped out. So it looks like we had a successful play. I got stopped out in profit, but looks like bears are currently trying to wake up. We have bearish confluence. I don't like entering. This shows strong bearishness. So and we have a bearish now we have a bearish fair value gap. So good might be a good opportunity. Looks like we might have a potential triple top situation right here for puts. It looks like there's no support below. So let me try puts right here. Just off the bearish fair value gap right here and bearish confluence. And it doesn't look like there's support below. This is just for a quick snipe. Let's see if it works in my favor. That bearish fair value gap was filled. So it's no longer, we might get an opportunity to exit this trading profit. I'm going to take profit just in case because, oh, here we go. Let's see here, I'm going to take profit. It should go through this. This isn't support. So it should go, it should want to go all the way down to 25,194. Let's see. Come on, keep going down. And it broke out of this algorithm right here. Come on. This might be acting as a magnet, so come on, let it go down. If it closes below it, it should continue down. We have 5 seconds. Okay, keep going down. So the blue line's angling up, acting as a magnet, but there's buyers um, right at the orange line. That's the macro level. Right now, gamma just is flipping from bullish to bearish, right in front of your eyes. So I think we could even potentially hold to the bearish magnet below, but I'm not going to be greedy. So looks like bearish gamma is so it's angling down. So bearish gamma is acting as a magnet currently. So it's another bearish fair value gap, and it's walking. That one just got filled. It's walking price down. So that's a partial fill, not a full gap, fair value gap fill. That's why it's still there. So the wick touched it, but it's rejecting off of it. bearish, a bullish gamma just turned bearish. So we should be a little bit leaning on the bearish side. Let's see what happens. We should hit this call wall and we should touch this put wall right here, this put floor. There's bulls down here around 25 187, but at that point this bearish gamma might as well get filled. Let's see. We can take profit anytime. I'm gonna get out because I just saw that bullishness right here. But this is probably gonna continue to go down. But I was green on the trade, so that's two wins right there. 50 or the other one I don't know was 50. I'm not sure what it was, but we have this is a initial. This is actually bullish. Let's see. It looks like it's a small so this means it's early buying. We have a bearish fair value gap still. So maybe I jumped the gun, but sometimes these candles go down, so they might give you a better opportunity to exit, but it's not worth it. So we exit in profit because things can change. And right now, bearish gamma is satisfied, but it's still bearish. So it's gonna continue to pull price down, but it's not completely it's better if we're below the gamma and bearish because it's gonna act like a sticky, it's gonna repel it once it gets touched, it's gonna attract it once it's at another level. So it looks like our theory is going to happen and we could hold. Let's try selling again real quick. Let's short this. Let's see. It's a win's a win. Let's see. Looks like there we go. Should keep going down a little bit more. Should touch the orange line. It's even 20 bucks adds up. Let's see, come on, touch the line. Unless it already touched it. There we go. Let's see here. Let's see if there's the bulls. Bulls are strong enough at that level. Probably will bounce. Let's see. So we have a bullish algorithm. Now it looks like we have a bearish a 1x time frame bearish candle. This might be our opportunity to get out with an official touch. Let's go here. Still hasn't touched it yet. All right, I took some profit. That was 45 bucks. It continues to go down. At an apex, I wanted to get out. So that was my target. Still have so you can see the power of these fair value gaps. Just taking a put at this level right here, it took us from 25,203 to 25,192. And bears are still in charge right here. But this is a bear flag, a bull flag actually. Actually, it's a bear flag because both levels are red of resistance. If this area, the top trend line was green, it'll be a bull flag. The price should be able to break out of it easier. Bear flags angle upward, bull flags angle downward. So price is breaking out of this flagging pattern right here. We have one bull flag, we have another bull flag. Looks like we have a little bit of a potential buy, but this candle, let's see where it opened. For a better view, you can always zoom in a little bit more. So it looks like a bullish candle. Let's see what we got going on in the chat. Hell yeah. So let's see. Boom. Nice big candle. Which one is the buy signal? The circles. So we have different buy signals here. Hang on, family. So we have different buy signals. This is the green is the initial buy, the first and earliest entry. You don't have confirmation. So I don't like entering necessarily on this candle unless we touch bearish gamma and we bounce off it. If this is angling down, do not get into calls until it flattens out. Um, or if yeah, I wouldn't touch it until it flattens out because it's gonna keep pulling price down. From my experience. Oh, we have some bullish gamma right here. Looks like price can go all the way up. Let's get some calls. Let's see what happens. And we opened up above this area right here. I just buy at market. We opened up above that candle, so we should go up. Even if we go down, we should go up. Another bullish fair value gap. These fair value gaps are easy money. What did I say? This is 3 for 3 right now. This is how you can pass your eval super quick. And you can see where the resistance levels are, where you can ride this up, this green trend line. It's not angling against it. It's gonna allow price to just melt up towards this resistance area right here, 25,205. And let's see what happens. Looks like we opened up above. If you zoom in, you're gonna get a microscopic view and a better view. So we're above a trend line, and it looked like we opened up where above where buyers macro wise are here at 25, 200 and 201 roughly. Looks like we're gapping up. That's a bullish sign. Let's take our $5 and run. $15. Let's go. Where's resistance at? Right here, where you can change these colors and settings. And I'll show you guys how I set up mine in a little bit after we exit this trade. Safe exits right here. And you can always move your stops so you exit out and profit, you know. If you think it's gonna go up, you can just move it up. I'm gonna put it my profit stop loss. Um, right at the fair value gap, just in case. I'm gonna give it some room, you know. Put it, actually, I'll leave it right there in the middle. I got hit. So, I took a little bit of a loss there, but this is a bullish fair value gap. If it gets filled, it becomes bearish. I should have put it below it, but let's see if I can make it up. I'm gonna try one more time. It's still held. So I got liquidity trapped right there. Let's see. Looks like we have a bullish candle coming up. This bullish fair value gap held. You just gotta trust the process, I guess. And I put it a little bit in the middle. I should put it below. It did not get filled. That was just a partial fill. So with these trend lines, they're dynamic to the time frame. So if price happens to go lower, it's gonna move lower with it. But the lower it moves, the less strength that trend line has. Right now, we're in this bullish algorithm. You can see the previous algorithm, and they tend to line up parallel wise. So let's see if this these parallel channels to each other, diagonal parallel channels can stay in this algorithm, continue to stay in this algorithm to take us up to this level that we thought it would hit. See if we can recover a little bit of our last loss. Let's see if I'm um, 3 for 4 or 2 out of 3. I can't remember, but let's see if our original plan would have worked out if we just put it right below it. Right now, we have oh, a few bullish things on our side. I'm gonna take profit. I'm not gonna be greedy, but I bet you this trend line won't hold. See? But that was my plan to take profit there. So I'm 3 for 4, I believe. And if I put it lower, wouldn't have taken a loss. So these fair value gaps will act as areas where you can help you locate areas where you should put your stop loss. And see price crossed above. It's gonna right now, since this is a bearish trend line, it's gonna act as resistance. It's gonna play with you and your emotions. So it looks like we have another bullish fair value gap right here. So, so what is a fair value gap? Oh, that one just got closed. I was about to show everyone. Let's see here. A fair value gap is the space from let's say, let me zoom in so you guys can see a little better. So this candle, where it closes and where this candle opens, is a fair value gap. But this candle closed its own fair value gap. It's the space between where a candle and open and closes, but where it closes is the bottom of the fair value gap, and where it opens is the top of the fair value gap. So price um should eventually touch that, but a bullish fair value gap shows bullish momentum, meaning price should continue to go up. But in this case, it was closed. If it's closed, especially if it closes itself, um, that means that the bullish momentum might be over. So we do have resistance. So this was expected. That's why we take profits at our targets. All right, so let me show you the settings just to recap, we do have the golden trend line here right now. So this is already available, but I moved it away off the chart because I saw that I was interfering with gamma levels. So whether I put it at the top or the bottom of the chart, it was hiding the gamma level. So I took that indicator and I transferred it to down below as an oscillator to make it a little bit more visually aesthetic. So I'll release this indicator as soon as possible. But you do have access to it I currently have updated net drift indicator. So I haven't published the new version, but the new version has removed the trend line. So your version will show the trend line right here, but you can always add it currently and hide all the other features of golden net drift. You can add it on the screen, add the indicator, and you can right click and move it down to the area below. Like if you let me give you an example right here. You can right click and you can move chart. Well, that's not the right way, but you can do it right here with this up and down arrow. You can move the pane up or down. So if you can always move one of these indicators up or down same way by going to these three dots, the settings more. You can move to new pane above or existing pane below. So that's how you can sometimes turn indicators into oscillators. If you don't have access to coding or you don't know how to code, that's a way to see a different view without price necessarily interfering. Um, with the chart if you want a clean view of the indicator. So for the micro version, let's see the micro version for golden net, the settings. So I have 0. This is for the style. Everything's turned on. I leave it as is. But for inputs, I have reset cumulative each new regular session 0 DTE field. So that means that we're getting a 0 DTE field. It's a like 0 day to expiration trading. So it's gonna be a scalper's environment for these type of this basically means this is the micro version of this indicator. We're looking at it a micro time frame, today's time frame. So I made the call colors yellow. I made the put colors blue. You can choose whatever colors you think are best for you. Too much red and greens, it's gonna mess with the trend lines. So I choose colors that pop tend to pop out. I choose yellow for calls because it makes me think of the morning, like the sun, time to wake up. Well, bulls are gonna wake up and feed on some green. So and puts makes me think of night. So it means the end time for bulls. Bulls need to take a break and go to sleep. Bears are gonna wake up out of hibernation. That's just how I visualize it. I don't know if that makes any sense to you, but you guys can do what you like. So I have my show zero line on, show my net drift line on, and I fill net drift to zero. That means that the space between here or above this zero line is going to be green or red. So right now you can see that's muddy if you look back here. So this is the space between the two indicators because I have the two indicators currently turned on. So this is the bullish area above 25,207. This is where bulls are in control, and it's choppy between 25,203. You can see it chops and or rejects at this level. So this is the danger zone that you. This is the level you need to break up above, and this is the level that will act as resistance, as you can see with this. So if you look back and scroll back, you're going to get more information out of these indicators, and you can see where the put walls are based on the history of where the blue lines are and where the purple lines are. And the purple lines are macro, so they tend to stay horizontal. And the orange lines are macro, so they tend to stay horizontal. And we're going to show you how we get that. So let's see. Make sure I showed you all the settings for the micro version. I also show edge labels. I think that's automatic. I just also extend line to the right. I extend lines to the right. That you have to make sure you click on. That's what's allowing me to see who's in charge, who's in control right now, bulls or bears, because it's going to show the angle of the slope of the line. I was thinking of adding a horizontal dash line, but it might be too many lines, but I want to get you guys' opinions on that. So I'll ask you guys in the Discord in the chat. So let me know if that will help you visualize it, or if you prefer those lines to be horizontal. You can always use that if that's your preference. But I like extending the lines to the right in a slope manner because it lets me know who's in charge. Right now, if the blue line's angling up, bears are in charge. And we have bearish fair value gaps. These are these lines right here. We have bearish resistance, and we have a bearish confluence right here. This means two time frames are in confluence with this small circle. Sorry, normal size circle. And we're below right here the put line where sellers are taking profit. So we should be bouncing somewhere below. There's no buyers until looks like 25,193 from what I can tell. So we might bounce there or where the macro buyers are. So you might let's see. So if we zoom in, you'll notice the chart will change a little bit. So right now, let's get a more microscopic. So since we're in an interesting place, and we're below a call wall currently, but let's zoom in and make sure that's the case on a multi-time frame. So it looks like there's no we're at a level where it may bounce. This is a macro, so it's good to zoom in a little bit closer. I know I'm talking fast, but it's midnight, so we won a couple trades. See, so it looks like we did have support there, and it looked like we had a little bit of support from back here where we were looking. This we had some buyers in the area once we fell below the put line. But this gamma here should be touched because let's see, do we touch the top? We touch the top. We still haven't touched this bearish gamma on a little bit of a larger time frame. We got close, but let's see if we on a closer time frame we did touch it. So technically, this has been satisfied in my opinion, and we should be trying to go up to and touch this put wall here. We have a megaphone pattern, so anything can happen. We really want to see price open up above this call wall before we go long, and it's so early. The trend's still bearish, and it looks like our scanner, which is part of the golden net drift indicator at the bottom, looks like it's showing bearishness on the current and the multi-time frame. So we have show scanner markers on, and we have show confluence scanner on, and extend lines to the right. So this scanner right now, even though it's tiny, it says 0 DTE field. It says It's a strong, let me hide this drawing tool. It says this is a net drift slope confluence scanner. So it's going to tell us how much bluish a bull confluence we have and how much bearish confluence we have. And then we have the non-zero DTE confluence. It shows us how much bullish confluence and bearish confluence. Currently it's 3 out of 3. So bears are currently still in control. We're just starting to get some early signs of bullishness by opening up above this um bull demand area, but it's angling down, so I don't know how strong bulls really are, but we're being magnetized to this bearish gamma, which was previously just recently bullish above this 25,203 level. Should repel price down to the other magnet, theoretically. But we're above a macro call wall. So we gotta be safe. And we have a bullish fair value gap forming. We're above, but we are right above a bearish gamma level. So and we have this pattern going on here, this channel right here. This is a potential bull flag breakout. It's going to be bearish while it's in this flagging pattern, but eventually should break out. Um, the best breakouts are when there are no resistance levels above. Um, right now we have bearish gamma, so it's not the most bullish environment. It's not convincing me to go along. So if we zoom in, let's see here. So we have a wedge pattern going on right now too. This could be an apex level right here. This should be acting as resistance. This trend line right here. But let's look at the macro golden net trend. And these are the settings. I check off reset cumulative each non-regular session. And I make my macro a call floor or a call wall depending on its location. I make it orange and I make the put wall or the put floor purple. And I show the zero line, I show net drift. I feel same thing as the micro. I just change the color, and the only difference is I check off reset cumulative each new regular session to give me a non-zero DTE macro field. I do extend the lines to the right, and that's two slow confluences. It won't matter if it's checked off or not because they account for both zero and non-zero DTE timeframes on the scanner. So, and below it's going to give you the zero DTE bias, and right here we're giving you the multi-time frame bias in addition to a non-zero DTE bias. Right here, I give you it's checking multi-time frame. So it's a lot built into this scanner. You can also change the size of that um, table. So you can change the location and you can make it a normal size. So if that helps you, it'll give you a pattern, a bear stack pattern, bearish stacking. So multi-bearish time frame stack on one another. So this is the 1 minute. So keep that in mind because things can change quickly with the 1 minute. That pretty much I have these other indicators, but they're still in testing. This is in testing the golden confluence scanner. It just lets me know current time frame. This is 1x. I make it small because I use my mobile typically to trade futures. It's just easier for me, especially when I'm on the go. So currently it shows you the 1x, 3x, 9x, 27, 93x, 243x time frame. So that's the 1 minute, 3 minute, 9 minute, 27 minute, 81 minute, and the 243, which is basically 4 hours. The 91 minutes, basically an hour and a half. 27, half an hour. 9 minutes. It can be your 10 minute. So I just like these time frames. They work well for me. The any number uh three means it's a trend. That's why I use the number three, and I use multiples of three to see higher time frame trends. And I use the 1 minute time frame for my entries because one is prime, so it's perfect for entering. Especially if you have Confluence with the multi time frame, and from the beginning of the Zoom, some of you might have saw that I have basically multiple time frames on. So if you know, when in doubt, zoom out. So I have the exact same settings applied across the board. So one thing I really want to press upon you and recommend to you is look at where the candle's opening versus where the candle's closing. If a candle's opening below the previous candle, it chances are it's not the most bullish candle, and it's going to either it's eventually going to it might become bullish initially, or it might become bullish post, but it's gonna have a bearish price action. This candle here made a lower low, but it also had some bounce support here at these levels. So, but also I also like looking back, because if you look back, this we have a bullish candle here. It opened above, it closed bearish, this candle right here. And typically when that happens in a bullish environment, it means that price action is going to want to retest this level here, and it's going to want to see if this is really resistance. And honestly, that's something that might be happening right now. So we have bearishness here, but at any point within this arc right here, we have a lot of bullish support. I can see that we might want to test this level, and it might be happening before we know it. Look at all. So we have the highest time frame here. You don't need all these. You can use three time frames. I just like using the 27-minute as my guide. So if I saw where the 27-minute candle open, I would have been initially leaning bearish. But candles can turn bullish and bearish, especially if we're in a bullish trend. So looks like gamma is bullish on higher time frames, but gamma is below. So eventually price, that makes sense. That's why we're getting rejected up here, because gamma is all the way down here. Um, that's where all the buyers and bears, it's all the way at 25 140. So I do think that price is going to want to be pulled back down to 25 140, and maybe eventually 25,100 on NQ. If 25 141 140.50 doesn't hold, the price might want to come down. So we're starting to see some bearishness up here with these wedging patterns, these upward wedges. So with futures, it's a lot about wedge patterns. So if you can master these patterns, you can become a great futures trader, especially with this indicator. It's going to help you. So if you get Confluence, look at this. We have bullishness, bullishness, bullishness on three time frames, based on the scanners. So if you um, and we had a buy signal, the previous candle. See what happens. The liquidity hunting right here. We had a bullish Confluence. That's why you need to really, when you take a trade, you really need to have guts and bravery, because the market maker will make you really question your decisions right here. Look with this liquidity hunting. So, and the way you can gain confidence is with bullish fair value gaps, especially if you see them on higher time frames. They're going to work really well in the lower time frames. Look how well these bullish fair value gaps, where it's taking price. Price is probably going to go back up to 25, 225, 227. So we do have, so if the good thing about the higher time frames is going to show where we have difficulty at on a small time frame. So we might get a little bit of trouble here, because it looks like bears are acting have a little bit of a strength at 25, 215, 75. So you can always move your stops up, or consider taking profit at this level, because we don't know. Right here, it's on this time frame saying it's up here, but right here it's saying a 25, 216 might act as a put wall. But bears are bullish up here. See, I don't really, when these two lines are angling up, I don't really trust it, the move. So this might be a good safe take profit, because they should always be going in the opposite direction. Bears and bulls shouldn't be agreeing that we should move price up. One of them should be in disagreement. So we have to look at smaller time frames. See, right now it means bears are saying price should continue to go up on this time frame. because the blue line's angling down, the yellow line's angling up, and as always, the macro line is typically the macro line is horizontal. That means it's neutral, but neutral support or neutral resistance if it's a orange or purple. But if it's angling up, you have multi-time frame confluence. That means that uh, the on a macro level, uh, the macro level is bullish and the gamma is leaning bullish. So if you see the orange line angling up, that means bulls are in control on a macro level, and these levels should hold. And if you see the purple line, this line, let me zoom in on the lower time frame. If you see these purple lines, these lines are angling up. That means that bears are in control. If it's angling down, bulls are in control. But it's horizontal right now, so it should just this this is just zone trading. You can take puts at the top typically. This is a 200 SMA, and I believe I didn't turn on. This is another indicator I'm testing. It shows a trend line breaks, and it also shows the 200 SMA, the 20 SMA. So I made the 200 SMA white Bollinger Band. I'll show you how I did that. Just go into settings and change the length to 200, and the style I just made upper and lower white, and I hide the basis line, and I make sure the background's transparent. So I hit OK, and that's about it, family. Like we have some resistance up here, but it's a bullish trend. Look at all these bullish fair value gaps we could have rolled up. I want to see you guys pass your evaluations with with this fair value gap indicator alone. So and zoom in to find out where is the safest exit, and zoom out, because if this gamma right here, you see gamma is angling up, but it's down here. But when you zoom in, it looks like it's up here, but it's been fulfilled. And this purple line's been touched, but not, it might have a little bit of room. This is a tool in the SMA. If it's angling up, it's saying, yeah, price should be coming up here and touching me right now. But it's good to know where the regular Bollinger Band is, and it's currently at, looks like 25,202.50. So this is a major breakout above the Bollinger Band. Where, oh, sorry, it looks like the Bollinger Band is at 25 2. It's very light. You might not be able to see. I made it gray. It's kind of hard for me to see it myself. But it's right here at 25 to 1920. So, but I do think this is going to continue up and touch the 200 SMA up here, or this purple line, which has been acting as resistance while sloping down. So just change your view. If this is too dynamic for you, the golden net drift, that's fine. We have other indicators available. This is golden order blocks. Since it's a dynamic view, it's ever changing, and you may not get used to it, or you may not size it right until you play around with it. You have to play around with the price and the time. But I think the indicator works pretty well. You can use the golden order block indicator, and it'll work pretty much the same. Let me see here. I'm not sure if this is the right version. It's been a while. But I just want to illustrate this for so so here we go. Um this is the support line. I made it white, the extension, just to differentiate from all the red and green lines typically on a chart. So, but you can see from the left and the right, this is the range right here. So buyers, this is where buyers should be at 25,107, and this is currently where bears are at. So if the golden net drift indicator is too much for you, you can feel free to use this one. This is a little more stable, showing you where resistance is. We're closer to resistance um, versus where you probably will want to buy. Let's zoom back to see if that was touch recently. So it looks like that's where buyers were, and they came in, and currently this is the level of resistance. So, um, yeah, I personally like the other indicator better, but if it's too complex and you need something a little more simple, this could work just as fine. Use the Bollinger Bands. This is a little bit light, but you can adjust the settings. You can always just turn on the regular Bollinger Band indicator for the 20 SMA standard deviation. But it looks like we have some bullish confluence. We don't have any fair value gaps. You can enter here. Um, if you like, it'll probably go up to this level up here as resistance. But I think it's better to wait for a fair value gap because you can just ride the wave up. Each fair value gap is basically a stepping stone. And each bearish fair value gap is typically a stepping stone down. So when you walk, you take let's think about this. When you walk, when you take the stairs, you take a step up and then you put your foot down. Then you take another step up and you put your foot down. Each fair value gap is acting as a step up. And inversely, if you're taking the stairs down, let's see, it's been bullish, so I don't see any bearish fair value gaps. Let's see if we can think of let's see if we can look at, well, I don't know what futures indicator right now. Ticker is bearish, but when you have bearishness, you're gonna take a step down and then you're gonna lift your legs to go down to the next step. So you're gonna see a bearish resistance, and that's where your knees basically hitting and also being forced down by gravity to the next step below. That's another way to think about it. If you have a hard time grasping the concept of fair value gaps. So this is I think I want to show you. So earlier, but I didn't have a fair value gap available. So let's hide the indicators besides fair value gap. Hopefully it doesn't get filled while I try to show you this. So this is an example of a fair bullish fair value gap. Um, so it's the top of the wick of the previous candle and the third candle. So let's call this candle 1 and candle 3. So it's this difference, the space. It's not a real gap, but it's a fair value gap. It's a space from the top of the wick to the bottom of the third candle, whether it's the bottom of the wick or the bottom of the body, however the candle forms. So that forms a bullish fair value gap. So it's bullish momentum. So it will continue until these fair value gaps start getting filled. So it's normal to see about 2 or 3, I would say, 4 or 5 if you have really strong momentum. Let's see if we can see. Let's look at MU on the daily chart. So these indicators also work on the daily chart. So look at MU. I mean, it makes sense. We have 3 bullish fair value gaps right here. This is a gap up, but so they work on the daily time frame. Golden trend line. It's a classic. So if you want your chart to look similar to mine, this is how I go about it. I'll release the scanner soon and the neon trend line. It doesn't work on the higher time frame, the neon trend, unfortunately. So let's see here. So this is MU on the daily chart. So it was in a bullish environment after 248, bullish imbalance. And looks like gamma is around the 377 right now. So looks like it's been touched as of today. So I don't really want to be a bull up here. I want to be a bull around this level, this area here. But potentially buyers might want to buy the dip at 326, but it's more than likely that price will have to either come down to 312 or 287.55 for MU. Well, I hope that you enjoyed today's live and you enjoyed some of the free trades and live trades. I hope you guys participated. They're small wins, but uh, if we catch the tops and we catch the bottoms, we time it correctly, we can do very well. And I want to show you some examples of before I go on how to do so. So when we have the golden net drift indicators on, you want the main thing you want to look for is where gamma is at. So we can have bearish micro and macro gamma. So if gamma is below micro and macro, right now we have micro up here and we have macro here, but sometimes they'll both be red and they'll both be below price. So that means that price action, no matter what happens, it will probably hit a put wall and it's most likely going to be gravitating downwards towards this bearish gamma. And so you can anticipate price action doesn't mean price action can't be bullish. It just means that price action will most likely be magnetized towards that bearish level at some point in the day. So you want to look for this blue line to be angling up. But the for to be bullish, you want to see price action. You want to make sure bearish gamma is either flat, which is neutral, or angling up. That means that bulls are in control. So you want to look for that for bullish entries if we ever hit this bearish gamma. Don't enter calls while it's angling down. It's very risky because price action can continue and most likely will continue down. And a trick that I've learned to find where price action can go down to is by zooming out very far and seeing where gamma was at. And it's pretty easy to trace. So you can also do this on higher time frames. It's going to give you levels. Um, if you really are looking at the higher time frames, you're going to do very well. It's going to show you uh, a lots of information if you zoom out. It'll show you where the yellow, where all the buyers are at, where the blue is, where all the sellers are at on a micro basis, and purple where the macro sellers are at, and where the macro buyers are at with the orange lines. So just a few tricks for bullish environments. You want to be above this bearish gamma. Uh, it'll be great if we have a bullish gamma above like we do here. And if we touch this line, we want to make sure that we're above the put wall and we're above a call wall, the yellow. Typically, the best setup will be either purple down here or a blue line, and we crossed above both the gamma and the blue line. Right now, gamma is and the put wall, the micro, it's kind of at the same location. So let's see if it's accurate. So they're at the same point right here. So bulls are currently fighting bears right now, and bulls are currently winning the battle. So once price is above this, theoretically, like back here, that's the safest opportunity to get calls. But you want the best order will be red, blue, orange, and then yellow because you want the micro time frame to be more bullish than the macro time frame. Otherwise, uh, it looks like bulls aren't as strong if they're not currently stronger than the macro bulls. We need the micro bulls to be stronger. So the best order, this isn't the best setup currently. It might be choppy. You want micro bulls to be above macro bulls. So same with bears, the bears opposite. You want bullish gamma to be satisfied. Bullish gamma is up here. So it looks like bullish gamma is satisfied right here and it turned bearish right now. So this is satisfied. And it's always best if we touch a put wall. If we had a bullish gamma above here and the put wall is right below, as we saw earlier, I believe. Looks like we had a bullish gamma up here. At some point, we had the put wall. This is a great setup to short. It looks like the put wall was above on the bullish gamma. So because the bullish gamma was satisfied and bears were sitting there waiting to take profit on or waiting to enter puts, I apologize, and send price action to the opposing magnet. There's no bullish magnet above. Um, we had bullish gamma here, but it's currently bearish. So it's flip-flopping, so it's in between. It's best when gamma's at the top and at the bottom, so you can see clear ranges. I really don't like it when it's in the center of the screen. But this is going to indicate choppiness, so you need to take profit quickly. So for me, just to reiterate, I like it when it's red, uh, purple or blue, and as long as we have an orange and yellow line, um, we have some bullishness, a good opportunity to enter longs. And for puts, we want to see bullish gamma up here be satisfied. And then we have a purple line or blue line and price across below it and open and close below it. And it doesn't hurt to have these fair value gaps. So right now, this is a sticky situation. Looks like we have a fair value gaps within fair value gaps. So as I said, it's going to show choppiness. So this isn't the best trade environment. Currently, we have a bullish fair value gap, but we're inside a giant bearish fair value gap. So, situation like this, I might just exit even if it's at a loss. But just look at what Gamma's showing you. Right now, it's bullish, but looks like it's been flip-flopping. So sometimes the best time to trade is when things are a little bit more clear. So gammas in opposing levels or in the same area are going to paint a clearer picture. If we have bearish gamma above, that's a clear picture as well. That price is probably going to get rejected. If we have bullish gamma below, that's a great area to consider going long. That's pretty much it. So let's continue to try this indicator. Any questions, let me know. We're gonna learn and improve together. So any feedback, I appreciate it, and I hope you guys indicates for dummies for real because it's drawing. Thank you, Bandito. It's drawing supports, resistance for you. It's doing everything for you. So it don't get no clear. It's telling you if you see a bear flag, it means that we're gonna have bearish price action. It might whipsaw up and down, but most likely we're gonna have a price action receding. And if you see a bullish flag, we're gonna have price action. Um, look at this, like look at these flags. It's telling you it's going down. If you enter here, you might have to add though if you see another flag. Um, but up here it worked pretty well. We had a bull flag, so if you enter here, you enter near the top, but it did flag up. Like so, be careful where you're entering these bull flags and these bear flags because if bullish gamma is satisfied, you shouldn't really be going long at this point, especially with a put wall right up above it. You just gotta put everything in perspective and put everything together. And these golden trend lines are gonna be helping you see where we might bounce at because they tend to line up with gamma, these patterns. So they'll help you visualize patterns. So use what we got. Look at all these bullish fair value gaps. Use these bullish fair value gaps as almost automatic wins. Look at this. So have a little faith and trust in yourself. Have no fear. Be brave right down here, especially if this is um horizontal. Be brave and be fearful up here at this put line. And and be brave to buy potentially puts down here. As long as this um bullish gamma is below, price action is gonna want to eventually go back down here. So it's not above until it moves above price action. It's not a threat. But it is moving up, but it has to be above price. It's not above it. So price is gonna want to come down. So it's probably best to lean long. I mean short. And look at this. We're getting short signals, but we're above support. We need to open and open below the support level to continue down. But look, lots of support. So it's a dangerous zone. You might want to wait for a bearish fair value gap. Just saying. I hope you enjoyed tonight, guys and girls. And I'll see you on the next live, and we'll do some more live trading. I apologize for coming in so late, and I thank everyone who stuck around. Have a great night.
Thanks, Wolf.
You're welcome. See you soon.
Yeah, have a good one.